Welcome back to Today, Assess Report, your trusted place for the latest crypto insights, market trends, and future-focused analysis. Today, we're diving into a powerful idea that's been spreading fast across the crypto community. 5,000 XRP will change your life. Here's why. Now, before we go any further, this is not hype and it's not financial advice, but it is a realistic discussion about how market cycles, adoption, and long-term positioning could turn a relatively small holding into something much bigger over time. Many investors are starting to look beyond short-term price swings and instead focusing on what happens when utility-driven cryptocurrencies finally step into global financial systems. XRP has always been positioned differently from most digital assets because its primary focus has been cross-border payments and institutional integration. That difference alone is why many analysts believe the next major crypto cycle could look very different from the previous ones. When people hear the number 5,000 XRP, the first reaction is usually curiosity because at current prices, that amount still feels reachable for many retail investors. Unlike extremely high-priced assets, XRP has historically traded at levels where accumulation feels possible without needing massive capital. That accessibility is exactly why the conversation around life-changing potential keeps appearing online. The real question is not what 5,000 XRP is worth today, but what it could be worth if large-scale adoption actually happens. Crypto markets move in cycles, and every cycle brings new narratives, new infrastructure, and new institutional involvement. Over the past few years, the focus has shifted away from speculation alone and toward real-world use cases. That's where XRP enters the conversation again, because its design was always centered around solving a financial problem rather than just acting as a store of value. One of the biggest reasons XRP continues to stay relevant is its connection to Ripple Labs, the company actively building partnerships with banks and payment providers around the world. While many crypto projects rely mainly on community hype, Ripple has spent years working directly with financial institutions to test blockchain-based settlement systems. This approach has created a long-term narrative that XRP could benefit if even a portion of global payment flows move onto blockchain rails. Cross-border payments remain slow and expensive in many regions, and solutions that reduce settlement time from days to seconds naturally attract attention. Investors watching this space often believe that if adoption accelerates, price appreciation could follow. That's where the idea of holding a fixed amount like 5,000 XRP becomes psychologically powerful, because it turns an abstract investment into a measurable future scenario. Another factor that keeps fueling this discussion is the role of market cycles. Crypto history shows that assets often remain quiet for extended periods before explosive moves occur. We've seen this pattern with major cryptocurrencies across multiple cycles, where accumulation phases are followed by sudden momentum. Many experienced investors believe wealth is built during the quiet phases, not during the hype peaks. When markets cool down, weaker hands exit, while long-term holders slowly accumulate positions. That mindset is now being applied to XRP again as investors attempt to position themselves before the next major wave. The idea is simple. If adoption grows and the broader crypto market expands, even moderate price increases could significantly change the value of a 5,000 XRP portfolio. This type of forward thinking is what keeps long-term crypto discussions alive. A major topic influencing XRP sentiment has been regulatory clarity, especially involving the long-running case between Ripple and the U.S. Securities and Exchange Commission. For years, uncertainty around regulation created hesitation among institutional investors, but recent developments have started to shift that narrative. Markets generally react positively when uncertainty decreases because it allows companies and financial institutions to move forward with clearer frameworks. While the legal process has been complex, many investors now believe the outcome has strengthened XRP's long-term positioning rather than weakening it. Regulatory clarity often acts like a green light for larger financial players who previously remained cautious. If that trend continues globally, the discussion about future price potential becomes more realistic rather than purely speculative. It's also important to understand how psychological targets influence investment behavior. Numbers like 1,000 XRP, 5,000 XRP, or 10,000 XRP often circulate in online communities because they create a sense of achievable milestones. Investors naturally think in terms of goals rather than percentages, and that mindset helps them stay consistent with accumulation strategies. The idea that 5,000 XRP could become life-changing is not based on today's price but on long-term projections tied to adoption scenarios. Some models assume modest growth, while others imagine exponential expansion if blockchain payment systems scale globally. The truth likely falls somewhere in between, but the discussion itself keeps investors engaged and focused on long-term positioning instead of short-term emotional trading. Another key piece of this conversation is how XRP compares with other major cryptocurrencies like Bitcoin in terms of purpose. Bitcoin is often viewed as digital gold, focusing on scarcity and store-of-value narratives, while XRP has always been associated with transaction efficiency and financial infrastructure. These differences mean that price movements are often influenced by separate catalysts. Bitcoin typically reacts strongly to macroeconomic trends and institutional investment flows, while XRP reacts more directly to adoption news, partnerships, and regulatory updates. Investors who understand these differences tend to diversify their strategies rather than relying on a single narrative. That diversification is another reason why some investors choose to accumulate a fixed amount of XRP alongside other assets. The conversation becomes even more interesting when we look at global payment volumes. Trillions of dollars move across borders every single day, and even a small percentage of that volume shifting onto blockchain networks could dramatically increase transaction demand. XRP was specifically designed to provide liquidity for cross-border transfers, which is why its supporters often point to real-world integration as a future catalyst. While no one can predict exact timelines, financial technology adoption tends to happen gradually before suddenly accelerating. This pattern has already been seen in digital payments, online banking, and mobile wallets. Crypto could follow the same path, and investors accumulating now are essentially positioning themselves ahead of that potential shift. Leadership also plays a role in shaping long-term investor confidence, especially through public communication and industry partnerships. Ripple's CEO, Brad Garlinghouse, has consistently emphasized regulatory clarity and institutional adoption as key drivers for future growth. Public statements from leadership often influence market sentiment because they provide insight into company direction and strategic priorities. While market prices don't move solely based on interviews or announcements, consistent messaging over time helps build narrative strength. In crypto markets, narratives are extremely powerful because they influence how investors interpret news events. That's why leadership visibility continues to be an important factor in XRP's ongoing relevance. Another reason investors are paying attention to the 5,000 XRP idea is the concept of asymmetric opportunity. This means the downside risk may feel limited compared to the potential upside if major adoption occurs. Many investors are not expecting overnight price explosions, but rather gradual expansion as blockchain infrastructure matures. Financial systems do not change instantly, but they do evolve over time. The internet itself took decades to reach full global adoption, and blockchain technology could follow a similar path. Investors who recognize this timeline tend to focus less on daily charts and more on multi-year outlooks. That long-term perspective is what keeps accumulation strategies consistent even during volatile market phases. Market sentiment also plays a major role in shaping expectations. Social media discussions, influencer predictions, and online communities often amplify certain narratives, including the idea of life-changing crypto holdings. While it's important to remain realistic, sentiment trends still provide insight into how investors are positioning themselves emotionally. When confidence increases across the market, buying pressure often follows. Conversely, when fear dominates, accumulation slows down. Understanding these emotional cycles helps investors avoid panic decisions and stay focused on strategy. The most successful crypto investors historically have been those who stayed disciplined through both hype and uncertainty. Another important factor is supply distribution. XRP has a large total supply compared to some cryptocurrencies, but circulating supply dynamics and liquidity conditions still influence price movement. As adoption increases and liquidity pools expand, Demand pressure can shift market structure over time. Investors often monitor exchange balances, wallet activity, and institutional flows to better understand these trends. While none of these metrics guarantee future price increases, they provide useful context for long-term projections. This analytical approach is becoming more common as the crypto market matures and investors move beyond speculation into data-driven strategies. It's also worth mentioning that technological development continues behind the scenes even when market prices appear stagnant. Blockchain infrastructure upgrades, payment integrations, and network improvements often happen quietly before being fully reflected in price action. Many investors underestimate how much groundwork occurs during consolidation phases. By the time momentum returns, much of the fundamental progress has already been completed. This pattern has been repeated across multiple crypto cycles, reinforcing the importance of patience. Holding a specific target like 5,000 XRP becomes easier when investors understand that long-term progress doesn't always appear immediately on price charts. Risk management remains essential in any investment strategy, especially in crypto where volatility can be extreme. While the idea of life-changing returns is exciting, responsible investors always balance optimism with realistic expectations. Diversification, proper position sizing, and long-term planning are all part of sustainable investing. The goal is not to chase hype, but to build positions gradually and consistently over time. This approach reduces emotional decision-making and helps investors stay focused during market swings. Even strong projects experience corrections, and understanding that reality is key to maintaining confidence through volatility. As we look ahead, the future of XRP will likely depend on a combination of regulatory clarity, institutional adoption, and broader crypto market expansion. No single factor will determine its trajectory, but the interaction of these elements could shape the next major cycle. Investors holding 5,000 XRP are essentially betting on long-term transformation within global finance. Whether that transformation happens faster or slower than expected remains uncertain, but the direction of technological progress continues moving forward. That forward momentum is what keeps long-term investors engaged despite short-term uncertainty. So when you hear the phrase 5,000 XRP will change your life, it's not about guaranteed outcomes or overnight success. It's about positioning, patience, and understanding how emerging technologies reshape financial systems over time. Crypto markets reward those who think ahead rather than react late, and XRP remains one of the most discussed assets when it comes to real-world financial integration. The coming years will be critical as adoption trends become clearer and institutional participation expands. Until then, investors continue watching closely, accumulating strategically, and preparing for what could become one of the most important phases in crypto market history.